What is ESG investing? Well, the basic concept has been around for a while. It's not an entirely new thing, but societal attitudes are changing. Climate change has become one of the big issues of our time, and ESG investing is a bit of a flow-on from all of that. So in this video, we'll take a bit of a look at what exactly is ESG investing, but also how you can invest for profit, the planet, and its people. Okay, so what exactly is ESG investing? Well, it's a bit of a spin on a few concepts that have been around for a while, such as socially responsible investing, ethical investing, impact investing, and triple bottom line reporting. They're all kind of different versions of the same thing. If we take triple bottom line reporting, not only would a company report on its economic performance, its profit, as would traditionally be the case, but it would also report on its social performance and its environmental performance. So did it do well by its people? Were people and society better off in general? And did they do much harm on the environment while they were carrying out their operations? And ESG isn't all that different to triple bottom line. It stands for environment, social, and governance. And ESG investing is just investing in companies that perform strongly on societal, environmental, and corporate governance measures. All right, so let's take a closer look at the E, the S, and the G. So here we have environmental from a little screenshot here from Motley Fool saying environmental factors that go into a company's ESG score attempts to quantify the impact, positive or negative, that their operations have on the planet, such as carbon footprint, water consumption, water disposal, recycling, climate change, renewable energy, and their relationship with regulatory bodies such as the Environmental Protection Act, and that's in Australia, I believe. So for social, we're looking at employee compensation, training, safety, OH&S, diversity and inclusion, the supply chain and the ethical sourcing of supplies, customers, government lobbying, and consumer protections. And for governance, they look at ethical business practices and policies, executive compensation, conflicts of interest with the board or executives, shareholder voting rights, transparency with the board, history of legal issues, and their history and of relationships with regulatory bodies. ESG is starting to become a pretty big thing, and as a result, a lot of money is flowing into ESG investing. People are more socially aware these days. Inequality is rising. People are seeing this with their own eyes. Climate change is a big issue, and the days of companies being able to make as much money as they want while at the same time giving little regard to the societal and environmental impacts, well, those days are pretty much gone. Okay, so how do you know if a company is a good corporate citizen or not? Well, they're going to be rated against environmental, social, and corporate governance criteria, and then they'll be given a score as to how well they rated against that criteria. But it's important to note that the ESG score is rated on market perceptions and not necessarily what the reality is. So you could have a case where a company is a very strong performer in all matters of environment and society and so on, but if they're not reporting on it and the analysts don't know about it, then they may not get a high ESG score. So there are some shortcomings there, and there are questions around the reliability because at the moment there are several different scoring system frameworks and there are several different scoring research houses that provide a scoring service. So the score that you could get from one research house or one analyst may be quite different to the score that you get from a different analyst. For example, one study has shown that there was a correlation of just 0.53 between ESG scores provided by different research houses. To put that in context, a correlation coefficient of 1 means that there is a perfect match. -1 means that there is an exact opposite match. Anywhere above 0 means that there is more of a match than not. 0.5 is not too bad, but there's still quite a lot of variation in that. So depending on who provides the ESG score can give very different results, potentially. And this can be a problem for companies, particularly if they got a bum score and they felt that it was quite inaccurate as to their environment, social, and governance operations. Needless to say, for ESG scores to have credibility, there has to be objectivity, there has to be accuracy, and there has to be a standardized reporting framework. This is super important because ESG investing is becoming a big thing, And the difference between a high score and a low score can affect the amount of capital that a company attracts, both at an institutional level and at a retail level. And of course, that also means that an ESG score could have a bearing on who gets rich and who doesn't, because more investment means a higher share price, which means more wealth for the shareholders. And there have been cases of companies fudging their environmental reporting in the past. So it just pays to remember that just because a company may receive a good ESG score doesn't necessarily mean that they are quite as good as the score says, and vice versa. It doesn't necessarily mean that they are quite as bad as a score says if they received a low score. Alright guys, quick little break in the video here. Now, if you want to make a little bit of extra money on your investments, or your cash deposits rather, you can invest with BlockFi. I think they're going to give you up to $250 worth of Bitcoin if you sign up, depending on how much you sign up for. It is possible there to earn quite high yields, I believe up to 9% at the moment, but also you have to be careful that you are aware of the risks. Investing with cryptocurrencies does come with a risk, so you have to be comfortable with that. I made another video that takes a closer look at BlockFi, so if you're more interested in how the platform works, check out the link above. But if you want to earn the high interest rates on your Bitcoin and other cryptocurrencies, hit the link in the description and you can go there and earn some money for yourself. So an ESG score probably is a decent idea in theory, but it's not perfect. It does have its shortcomings, and there is some potential there for the scheme to be corrupted and exploited for financial gain. But also important to note that it is a developing space, and there is a lot of work going into improving the consistency and the reliability and the standardization of the reporting framework in order to give a fairer ESG score. All right, you probably all want to know, how can you invest in this and make some money? Well, there are plenty of options. You could invest in the individual companies that you think align with the ESG criteria, but the easiest option for most people is probably to invest in an ETF. Now on the ASX, there's several options. You got one from BetaShares, an Australian Sustainability Leaders ETF. Vanguard has an ethically conscious Australian shares ETF. There's a couple from VanEck. BetaShares has a global sustainability ETF, so there's plenty of options there. Now, if you're in the US, you got plenty of options as well from Xtrackers, iShares, and also Vanguard. All right, guys, that's it for the video. Thank you very much for watching. If you want to see more, please subscribe. If you thought this video wasn't quite useless, but a little bit better, then please hit the like button, and hopefully we will see you in the next one.